All right, everybody, time for the weekly market wrap-up today, 4/27. It's a Friday, April 27th. It's coming up on 4 o'clock, and here's the deal. This week was another really exciting week of paddle really hard and go nowhere. For the S&P 500, we finished last week at 2670. We opened on Monday at 2675. We closed today at 2669.91. So again, it's like we're not going anywhere. And here's the funny thing. Earnings data, looking good. Companies making money. Geopolitics, fragile, but still looking better, right? You know, North Korea, South Korea, kind of getting along again. So basically, it's what can we scare you at to get you to watch the news. This week, here was the story, and this is what we're going to start watching. It's this concept of what we call peak earnings. So if you think about it this way, okay, earnings is going up and up and up and up, and then it kind of plateaus before it goes back down in a cycle. If we are here and earnings are not going to keep going higher, then people say, well, can the market keep going higher? And we don't really know the answer to that, but the question is, are we really at peak earnings? That's just the discussion. If we are, then we've got some challenges ahead of us, right? The markets would then have trouble being priced any higher. Let's say earnings do keep going higher, though. What's the issue? Well, the issue is somewhere back here, we guessed it to where this would be. And if we guessed too high, now the market has to price correct as well. So again, you could try to slice and dice the data a lot of different ways, but this is what people are struggling with is, are we really at peak earnings? And now we're looking a little farther out and saying, well, if we're here, where is here gonna be? That's the question, okay? So if you believe that here is lower, then by all means, I would be a cautious investor at this point. If you believe that here is higher, then we need to evaluate your assumptions in your pricing model. The good news is this is the kind of stuff that we handle for our investors. So if you're scratching your head, then by all means seek financial advice from a professional that can help you with this sort of thing. In your case, that could be somebody you already know, and if it's not somebody you know, hey, our office number is 541-375-0898. Also, more info at littlejohnfs.com. You can catch us on social media, all that good stuff. But I just want to give you that idea. Why is the market so confused? Because it can't figure out where it goes from here. Are we really getting better or not? And you tell me. Right now, while the indication is that things are getting better, it would be really hard to find that in the news. So of course, that's what we would call cognitive dissonance at that point. So that's why if you feel uneasy, you may have literally been sold that feeling. So don't freak out just yet. Maintain course and speed as far as long-term investments go. And here's one tidbit I'll leave you with that's a good idea. If we had this assumption that the pricing was going to go up into the future, right? And the markets assumed a price in there, and then we got to that point, and the markets hold the price, like we've seen for the last several weeks, right? Prices are not increasing. They're just sort of saying stable, stable, stable. Well, here this means this is the price that we've chosen, but now we're getting data that says earnings are actually up here. Well, if down the road earnings in fact do go up, at some point this price is going to say, okay, we're probably a little bit too much on sale, and finally move higher. So the longer we stay at this price as earnings get higher, the more attractive the valuation. That's the takeaway of the day. Thanks everybody for joining us again. This is David Littlejohn from Littlejohn Financial Services. Catch you next time.